All in all, oil prices remain stable amid the lack of news capable of affecting the energy market. Today, however, things may change dramatically. Traders are awaiting another report on the U.S. crude oil inventories from the American Petroleum Institute. Unfortunately, there are no forecasts. According to many investment banks, there is a high probability of a draw in the crude stocks. If these fears are confirmed, oil prices will gain upside momentum and hit for the level of $90 per barrel. Meanwhile, oil is losing value, weighed down by the news that China's industrial output and retail sales grew at a slower pace than expected. The readings failed to meet forecasts, which renewed concerns about energy demand prospects. According to the trading chart, Brent crude is in a correction from the resistance level of $88 per barrel. On the way down, bears faced support at the 85.50 mark. As a result, the volume of short positions decreased and the asset got stuck in a range. To extend its downward correction, the price needs to fix below the level of 85.5. Until then, the benchmark is likely to trade sideways. Gold fell below the level of $1,910 per troy ounce on the second try, thus extending its long-term downtrend. Nevertheless, one should not exclude a possible local rebound to $1,910 or even $1,920 per troy ounce. True, this rally is likely to be short-lived, then the yellow metal is expected to reverse and go down to $1,900 per troy ounce. Speaking of the ruble, as soon as the Bank of Russia announced an extraordinary board meeting, the ruble halted its slide and began gaining value. Obviously, the regulator intends to take emergency measures to stabilize the currency market and avoid excessive panic. These are situational auctions that are not beneficial for the market, as investors have to keep in mind possible unforeseen steps on the part of the regulator. The Bank of Russia tried to calm the market, but it had the opposite effect. How much of it was intentional? Most market participants expected the Bank of Russia to raise its key interest rate by 150 basis points. However, it hiked the key rate by a greater than expected 350 basis points to 12%. At the same time, the regulator left no comments on the ruble exchange rate in its press release, and the central bank cited extra inflation pressures. Notably, the recent pace of inflation was much higher, and this was not a basis for unscheduled meetings and emergency measures. Obviously, the Bank of Russia is making decisions in rush, or it's acting on behalf of states unfriendly to Russia. After all, high interest rates threaten the economy. Locally, this decision could support the Russian currency, with the dollar falling to 90 rubles shortly. However, this step is unlikely to temper inflation due to a decline in consumer goods imports. For the economy, this could do more harm than good. With such high interest rates, expensive loans will rather hamper economic growth, and this does not bode well for the ruble exchange rate either. The currency, the issuer of which is a regulator acting unpredictably, does not seem credible to international investors. Through its auctions, the Bank of Russia is just limiting the ruble's long-term upside potential. The stock market fell on the news as expected. So far, it has managed to avoid a collapse, but its medium term is rather gloomy. The stock market has enjoyed impressive gains over the past few months, with the correction being long overdue. Even if it keeps growing, its gains are likely to be insignificant, and the return of such investments will lag far behind that on bank deposits. Thus, small and medium investors will start to close their positions and open deposits with banks. And that's all for now. We wish you profitable deals. See you in our channel with a new video in a couple of hours.